Hello, fellow traders. 'Tis I, the Rumpled One. Thursday, November the 29th, the year 2018. Let's talk trading. You change you. If you want things to change, chances are you have to change you. There's a saying, if you change how you see the world, how you think about the world, then the world changes. You see, when you look at the market is the market. If you want to do better trading and you're struggling, then you're going to have to change. The market's not going to change. You have to change. You have to make a change. And the thing is, most traders, especially starting out, rather than trying to change themselves, they change indicators. They change time frames. They change what they trade. And they just spin their wheels. It doesn't work. What you have to change is you. Perhaps maybe you're not using money and risk management, so you have to make that change, that you're now going to start using money and risk management on every trade. I had an idea. I was talking to a trader, and it's funny because if I don't know if he's listening to this video today or not, but we talked just the other day, and he said he's having a really good month. And I asked him what system method he was using. He goes, "Oh, well, some of yours and some of mine and blah blah blah." And then I'm thinking, he's got a really nice rate of return. It's like over 1% a day. And he's still tinkering. See, sometimes the change is that you got to stop changing things. If you're always changing things, maybe you need to stop. If you're making over 1% a day, you realize you're in the probably top 1% of money managers, even if it's on a small account. You really think you need to change? I mean, think about it. Changed why? But in most cases, it's not the method, it's not the system. You have to change how you view. So, one of the things I want to do is today is a FOMC day. So, I'm going to look at a different chart here. What this chart shows are the highs and lows of the NFP dates and the FOMC dates. Now, if you're wondering how I do this, I've got the plot by date indicator I wrote back in 2016, and you just put the dates for the NFP dates out. Okay? And so you can put up to 12 so that, you can have basically a rolling year. Now, and same thing here, FOMC, see, little my note, tells you what you're doing. Now, why are these significant? Well, big money traders. And so what happens is, if you look at this chart, on these days, this is where big money pushes price. And so after these days, price is going to start to range or break out of those ranges. And if you notice, you'll see many times here, this is a daily, you'll see where price will come down and touch a line, like right here, the June 1 NFP high. You see how many times price just came right there? Well, that's because big money moved price to a level. Now, big money's going to defend that level. You got big money shorting, you got big money buying. They're going to defend these levels. I mean, and it's almost like clockwork. Look at this high here. the FOMC high. You see that? And this is no, we're looking at November, but you see how price respected that line? And see here, we put in a FOMC, and what happened? It broke out. Now, almost a month later, actually, yeah, no, more than a month later. Let's see, yeah, less than a month later, actually, because see, here's the FOMC high of 11.8. We're almost back to that low. So, how does that help us? I mean, you can look at the chart here. You can scrunch it up. Actually, what I could do, I could switch over to weekly. No, let's go back to, it's better to look at the daily, because that way you can see how many times these are respected. So once again, here you have the September. Now look here, look at what price did. It broke out. Let's see how price returned. And when it comes back down, you see how they either cut the lines or they'll stop at the lines. And this is all price action at the line. Once again, same old at the line trading. Now you could say, well, you're just throwing up a bunch of lines, blah, blah, and you're just talking a bunch of blah, blah, blah. Well, if that's what you want to believe, but there's one simple truth to this, and it's following the same rules that we apply to the previous day. If you trade with candle color at the line, usually you're going to be profitable. And you want to trade when price first encounters a line. So what you can do is you can preset your trades. So look right here. This is yesterday, this is today. Right here at the line, 129.16, it dropped all the way even a little below 128.668. Right? So it crossed this line and came back above it. That would have been a nice place to exit the trade. You got a clear entry signal here and an exit signal because it came and it went back the other way. Not a bad trade for a day. And you can see here what happened the previous day. It crossed the line. This was red. So if you entered there, you had about 10 pips or more here. It crossed it back. You could just say, hey, it's coming back across that line. You take it. Now you could say, yeah, but what, you could get whipsawed out and blah, blah, blah. Well, so what? You still made 10 pips. But the point is you can see the price action around these lines. I mean, you could also throw on, the sweet spots. I mean, if you want to, let's see, where is the sweet spots? Somewhere back here, right? I mean, sure, we could switch this over to daily. And you could say, yeah, well, look at, you've got these lines. Yeah, it's the same thing. It's exactly the same thing. The only difference is we know that the big boys put in these highs and lows on these announcement days. That's what we know. That's a fact. And so, as the big boys are trading, they're managing their positions. You got the bulls and the bears. And that's pretty much what they're going to do is manage these positions and try and push price to where they want it to be. It's not really that difficult. Oh, and if you're wondering, these are just a couple multimeters. I believe this is showing a rotation where price is rotating. MPM, you know what? I forgot what MPM is. It's been a long time. Oh, Yeah, it's a bias indicator. And it's using moving averages. That's all that one is. And of course, this is just a candle color. So you can see here we've got today is red, but everything else is green at the moment. But the main thing is not to worry about the multimeters. It's really just looking here at these lines and trading accordingly. I mean, it's really some powerful stuff. I mean, look at the August line. Look at how many times price cut through that line. Just trading off that one line. And then you can see here, July. It's it's not a difficult trade, but I show you this because today's FOMC, and you don't need these indicators. Yeah, it's real simple. All you have to do is that, tomorrow just put a horizontal line at the high, a horizontal line at the low, and leave it there. And you can trade off that line. So, for example, we're in November. Let's find here is the 2018 October lines. What happened in October? You can see here, if you look at price, just fell right through October. Almost got back, but not quite. And so if you look here, so you have the FOMC day. The very next day, if you just traded that breakout, you can see it was good to go. That was a nice short the following day. And if you look at the current month, you see here you had the same thing. The very next day, it broke out, and you had a very nice trade. Very nice trade. Especially for long-term traders, swing traders. I mean, all you have to do is just look at these lines, because once again, there was a lot of action here, a lot of action here on that day. I mean, they pushed the price up, they pushed the price down. They pushed the price down, they pushed the price back up. So you can see there was a lot of action here. And then the sellers said, we're stronger, and they really pushed the price down. So you can look at these lines as entry lines. You can look at these lines as take profit or target lines also. So a lot of times people go, well, when do I take profit? Well, if you look, if you have these lines, so for example, here, yesterday, you see, do I take profit here? You just ride it, and finally, it's like, okay, well, it closed right above that line. So if you held the trade over, quote unquote, overnight, you see it come back the other way. Now it's time to exit. And so, say on this day, let's just say on this day right here, you see it hit that line and started to reverse. Well, once again, you can see here it started falling below all these other candle highs. Just take your profit right there. Once again, very simple. Okay, well, of course, today's was a little bit different since it's FOMC day. I thought I'd change it up and really dive into how to trade FOMC. Remember, you're going to change, you have to change. You don't necessarily have to change something outside you. It might be inside, because no matter what, it's not what you trade, it's how you trade it. So go out there and drain the banks today on the FOMC day.